Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Selby. Global growth stocks have had a stellar year with the NASDAQ 100 lifting 23% in 2024 alone. But is there any value left in global growth? To find out, we're joined by Pollak from Loftus and Pullen from Magellan. First up today, we have American semiconductor company Qualcomm. Alex, I'm going to start with you today. Is it a buy, hold, or sell?
It is a buy, and it is a buy because it's held a really important position in phones over the last 15, 20 years, smartphones I'm talking about. And it's now got a set of chips that are going to go into laptops for the first time, or effectively for the first time, and that's a really, really big deal. So they're going from one line of business, phones, to two lines of business, and they will compete with Apple laptops in that. Very important. Okay,
its share price has risen around 70% over the past 12 months. Over to you, Alan. Is it a buy, hold, or sell?
Well, it's been a remarkable performer, but I'm going to have to be a hold here. So it has a licensing business as well as a chip business, which is very high margin, very profitable, and that's under structural challenge at the moment. So I don't see a lot of growth coming out of there. The chip business is excellent, but there is some balanced risk out there as well. A lot of the big chip companies, the handset companies, are insourcing their own chips. We've seen Apple do it with their processor. They might do it with their modem. So some great opportunities there on one hand, but a few risks on the other. So I have to be a hold.
Okay, next up today we have Microsoft, which is the world's biggest company by market cap. Staying with you, Alan, is it a buy, hold, or sell?
Well, it's a buy. This has been a fantastic company over many years, but the tailwinds are really still at its back. It's a leader in monetizing AI over the long term, both through its hyperscale cloud platform, which is growing revenue, accelerating revenue growth, remarkable for a company with $250 billion in revenue, kind of $90 billion in earnings, and it's still growing at mid-teens type earnings rates over the medium term. So still plenty of room to run in that one.
Its share price has lifted around 30% over the past 12 months. Over to you, Alex. Is it a buy, hold, or sell?
Look, we think it's a hold. I agree with Alan's comments about the quality of the franchise and the things that they've done in terms of AI, et cetera, and the enterprise base that the company also has globally. But we run everything through a discounted cash flow valuation and not a single period measure. We don't use any PEs. And on a discounted cash flow valuation, we really have to stretch to get the current share price. So I'm afraid we're a hold on this one now, just on valuation grounds.
Okay, last up today we have Walmart, which runs an astonishing 10,500 stores and is the world's biggest company by revenues. Last one for you today, Alex. Is it a buy, hold, or sell?
It is a buy. It is a buy because, a little known fact, 90% of people in the United States are within 10 miles of a Walmart. Walmart has got everything, so to speak, that Amazon has in terms of number of stores offering proximity to the end customer, but it hasn't yet rolled out a true omni-channel offering in retail. That is starting to happen. It's got businesses now in e-commerce and also in advertising. We think that will continue to accrete up over the next 5 years. The DCF is very favourable on that one. It's an easy stock to hold.
Okay, its share price has risen 36% over the past 12 months. Alan, is it a buy, hold, or sell? I
disagree with this one as well. I'm a sell on Walmart. It is a great company, so I admit that. However, it's got some nice businesses, the marketplace business, the advertising business, faster growing, but the bulk of the business is still an old school offline retailer, which grows at around low single digit levels. So that's going to make it tough to really grow longer term. And at current valuations, which is pushing up towards tech levels, I think it's a sell.
Okay, we asked our guests to bring along a global growth stock that they believe has been mispriced by the market today, one that is being undervalued by the market. Alan, what have you brought for us?
So I'd like to talk about Booking Holdings. So you might know Booking Holdings from Booking.com when you're hopefully booking your hotels around Australia or overseas. It is one of the world's two big OTA, online travel agents. It's in fact by far the largest of those two and holds a number of different brands like Priceline, like Kayak. Travel has a long-term growth tailwind. As people become richer, they tend to travel more over time. And this company is capturing an increasing share of that. And the quality of the business is improving as people tend to go direct through their app or their website rather than through Google or something like that. And they're increasing that share of direct travel. That's higher margin, it's higher revenue, and it's underpinned by long-term structural tailwinds. It trades a little bit cheaper than the market, which is remarkable for a company of this quality and value.
Okay, over to you, Alex. What company do you think has been undervalued by the market today?
That would be Taiwan Semiconductor. It's the only foundry in the world that is capable of doing the latest cutting-edge chips, enabling the extended battery life on new devices like AI phones and laptops. And it's kind of priced like an old-fashioned manufacturer in a lot of ways, but it's a gatekeeper in terms of its ability to generate cutting-edge technology at scale that cannot be replicated by anybody else.
Okay, well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.